Canada stands at a crossroads. The recent ascension of Mark Carney, former Bank of England governor, to the position of Prime Minister signals a potential sea change in Canadian politics. This shift in leadership comes at a pivotal moment for the world of cryptocurrency. All eyes are on Canada, watching to see how Carney's policies might reshape the crypto landscape. The decisions made in the coming months could have profound and lasting implications. Carney's history suggests a cautious approach to financial innovation. His tenure at the Bank of England was marked by a measured stance on cryptocurrencies. He acknowledged their potential, but also emphasized the need for robust regulation. This measured approach might lead one to believe that Canada is poised for a period of stringent crypto oversight. However, the global landscape is shifting. The United States, under the newly re-elected Donald Trump, has taken a decidedly pro-crypto stance. This sharp contrast presents both a challenge and an opportunity for Canada. Will Carney be tempted to follow suit, positioning Canada as a haven for crypto businesses fleeing tighter regulations elsewhere? Or will he chart a different course, prioritizing consumer protection and market stability above all else? The answer to this question will have significant consequences. The Canadian crypto industry is watching with bated breath, eager to see which direction the wind will blow. The stakes are high, and the outcome remains uncertain. One thing is clear: the future of Canadian crypto hangs in the balance. Canada's economy is grappling with uncertainty. The ongoing trade war with the United States has cast a long shadow. Tariffs bite, and the threat of recession looms. In this climate of economic anxiety, cryptocurrencies have emerged as a potential safe harbor for some. Their decentralized nature and perceived immunity to traditional market forces hold a certain allure. Canadians have long been at the forefront of technological adoption. They embraced the internet early on, and they have shown a similar willingness to explore the world of digital currencies. Bitcoin ATMs dot city streets, and a growing number of businesses are accepting crypto payments. This burgeoning interest in crypto is driven in part by a desire for financial alternatives. However, the economic case for crypto in Canada is not without its critics. Some economists warn of the risks associated with volatile crypto markets. They point to the potential for fraud and manipulation. Others express concern about the environmental impact of crypto mining operations. These concerns cannot be easily dismissed. The Canadian government faces a delicate balancing act. On the one hand, it must foster innovation and create an environment where new technologies can thrive. On the other hand, it has a responsibility to protect consumers and ensure the stability of the financial system. The choices made in the wake of this election will have a profound impact on the future of the Canadian economy. The world is grappling with how to regulate cryptocurrencies. It is a complex and evolving landscape with no easy answers. Some countries like China have taken a hard line, banning crypto outright. Others like El Salvador have embraced it wholeheartedly, adopting Bitcoin as legal tender. Canada falls somewhere in between these two extremes. In recent years, the Canadian government has taken steps to regulate the crypto industry. New rules have been introduced to combat money laundering and terrorist financing. Cryptocurrency exchanges are now required to register with the government and comply with strict Know Your Customer, KYC, and anti-money laundering, AML, regulations. These measures have been met with mixed reactions. Proponents argue that these regulations are necessary to protect investors and ensure the integrity of the financial system. They believe that a well-regulated crypto industry will foster innovation and attract investment. Critics, however, contend that these regulations are overly burdensome and stifle innovation. They argue that they drive businesses away and hinder the growth of the Canadian crypto sector. The Canadian government must carefully consider its next steps. It needs to strike a balance between fostering innovation and protecting investors. The outcome of this election will have a significant impact on the future direction of crypto regulation in Canada. The world is watching and the stakes are high. The future of cryptocurrency in Canada is ultimately in the hands of the Canadian people. Public sentiment towards crypto is mixed. Some view it with excitement, seeing it as the future of finance. Others remain skeptical, wary of its volatility and potential for illicit use. This division of opinion is reflected in the political arena. Some political parties have embraced crypto, incorporating it into their platforms and advocating for its adoption. They see it as a key driver of economic growth and technological innovation. Others remain cautious, emphasizing the need for regulation and consumer protection. They worry about the potential risks associated with cryptocurrencies, such as fraud and market manipulation. The upcoming election provides an opportunity for Canadians to make their voices heard on this important issue. They can engage with their elected officials, attend town hall meetings, and participate in public consultations. By making their views known, Canadians can help shape the future of cryptocurrency in Canada. The road ahead for Canadian crypto is uncertain, but one thing is clear. The decisions made in the wake of this election will have far-reaching consequences. The world is watching and the stakes are high. The future of Canadian crypto hangs in the balance.